Hey, I'm Jason, and this is Supply and Demand Daily, where I tell you what we learned about the economy today. I have some data on jobs from a couple of different sources, one of those being the United States government, which is the source of most economic indicators, unfortunately or fortunately, depending on how you look at it. But I have data from the Automated Data Processing Company, which processes payrolls for pretty much most of the companies in the U.S. It's basically a monopoly, so that's why they're able to publish these job statistics, and so that was very interesting. Had a huge miss from the ADP Jobs Report, which usually comes out a couple of days or one day prior to the non-farm payroll report, which comes out from the Bureau of Labor Statistics. Anyway, huge miss. We were expecting a lot of jobs to be created, and only some jobs were created, so I'm going to go into that. Jobless claims didn't change very much, and I'm going to talk about food supplies opening up. So it's possible that your tortilla chips may be a little bit cheaper by September because of what's happening in the corn market. So in order to do all that, I'm going to get out of the way, and we'll go ahead and get started, okay? So the jobless claims, this is a 4-week moving average chart of initial jobless claims, which means essentially people filing for unemployment benefits in their state of residence. This comes from the Employment and Training Administration of the United States, which I did not know was a thing until very recently. But anyway, what I've been tracking here is the number of weeks consecutively that this 4-week moving average goes up, because the more weeks that it does go up, that kind of signals that there's been a change of regime in the job market, which could eventually lead to unemployment. And a 6-week consecutive increase in the 4-week moving average is typically signaling some weakness in the labor market. And so we did not get a 7th week. We hit 6 weeks last week with the report, and we did not get a 7th week. But basically what we got is a week of unchanged data. So the 4-week moving average went down by about 500, not 500,000, but literally 500, which is probably within the range of a statistical error for this particular set of data. So not a whole lot going on there. I would consider that an unchanged week rather than a decline in the 4-week moving average. So I'll be very interested to see what happens next. And this is data with a 1-month lag. So when we talk about the recent data that came out today, that would be the week that ended May 28th, right? So, and then we had the jobs report from the Automated Data Processing Company, ADP, and the yellow line that I'm showing here is the total number of jobs, and that goes on the left axis, and those are in thousands. So the total employment for the United States, if you see a number like 125,000, that would actually be 125 million. And as you can see, we've been increasing at a decreasing rate over the last several months. And so there were 128,000 jobs, according to this one report, created in May. 128,000 jobs added to the economy. And that was juxtaposed to an expectation. So for each of these indicators, or most of them, there's a survey of economic forecasters on Wall Street. It's about, I think, 30 to 40 different economists across the financial sphere, and their expectation when you averaged all of their forecasts together was for a gain of 300,000, or about 299, and we came in way under that, 50% under, over 50% under. So that's quite crazy. Now, the other thing that I wanted to point out that usually doesn't make it into the headlines is ADP will report the job gains by different size of businesses, and pretty much every bracket of business gained some jobs in May, except for small businesses. Now, small businesses, as it turns out, have actually been down on employment in the last 3 months. So ever since February, that's when there was a relative peak reached. For the months after that, it's been a little bit lower each time, with the exception of this little tiny jump, which looks like it was in April, and then, probably March. They might have been going down since February. Actually, I need to look back at the data. But anyway, the small business employment gains have reversed, and they've actually been dropping. The amount of employment in the small business sector, which is 1 to 49 employees, according to ADP, has been dropping steadily for the last several months. So that is definitely concerning and something to keep your eye on. The small businesses do tend to precede the larger businesses in this particular area. So definitely something to keep our eyes on here. And then this is just showing the gain monthly in jobs numbers on this particular this ADP report going back to about May of 2020. So I have 2 years of data here for you, which I picked that interval specifically because it was in May of 2020 when we started to get a recovery in the job market as some states actually opened up their economies in May rather than December or going into 2021 like a lot of other states did. I know Texas, where I am based, certainly opened up during that month after a brief April-long lockdown, and you could just see how this number has steadily declined. You can see this declining peak, ever since the middle of 2021 basically, and we're sitting at the lowest number of job gains ever since we first started the recovery from the depth of the COVID lockdowns. So just wanted to point that out. And then lastly, I want to talk about corn and corn prices. So corn planting, the USDA posts corn planting progress reports, and not just for corn but for all of the other major food commodities as well, like soybeans and such. But what this is showing is the steady progress between mid-April and the end of May in all of these different major agricultural states. In this green color, so this is in thousands of acres planted, and this green color means that no acres were planted during this particular week, and then we advance here on down to, or on up to, massive amounts of corn planting. And basically what this phased chart, or what this phased data visualization is showing you, is that after getting bogged down by weather and freezes and stuff like that, late season freezes that really are unexpected and not necessarily supposed to happen, these states have definitely roared back in terms of corn planting, and they're certainly catching up to where they need to be. And so I've visualized that as well, just for a handful of states. North Dakota, for example, went from only 20% of its corn crop planted, and we say 20% based on what was planted and harvested in 2021, went from 20% all the way up to 92% in a week. So it's pretty crazy what happened there. And then Indiana, to a lesser extent, went from 62% all the way to 90%, again in that same week period. 64% to 92%, excuse me there. And so the dark green line would be the week that ended May 24th, and then the green line would be the week ending May 31st, which I think was actually this Tuesday. So the weeks that they report on are not, this may have actually been, should be corrected to the week ending the 28th or the 29th. So I do apologize for that little mistake there. It's been a heck of a Thursday around here in Allen, Texas. Oops, just gave away my location, excuse me. All right, and then the last thing that I wanted to point out is prices respond to these sorts of, supply phenomenon. So what this means essentially is that there will be more corn harvested in September, more corn harvested in November in the case of the further northern states where the harvest is a little bit later in the year. And so prices, this is only showing September corn prices, but they've definitely responded. So there's been about a 10% decline just in the last couple of weeks as this new data on the catch-up in corn pricing, or excuse me, the catch-up in corn planting has started to hit these online forums. And of course, people in the agricultural commodity space, agricultural commodity traders, are definitely watching those USDA progress reports like hawks to try and determine what the demand and supply dynamics are going to be around harvest time. And of course, a lot of these contracts are basically negotiating expecting delivery in advance. So somebody who needs corn and knows that they're going to need corn in September is getting into these contracts, these futures contracts, in order to mitigate the risk that the price is going to go either up or down in that time frame between when they actually need the corn and when they know they need the corn. So that is the ultimate utility of these futures markets, especially for things like food commodities, is it makes business costs more predictable and allows a more steady supply chain of food down the line. So a lot of things are affected by corn prices, and that's why I like to kind of dip my toes into this area maybe every week or two. And so that's all I have for you today. Tomorrow we're going to get the non-farm payroll report from the Bureau of Labor Statistics, and so this is the government version of what I just went over from the ADP company. And so we're going to see how that contrasts. The main thing that I'm going to be looking for in that report is I think that there's going to be some solid gains made, but last month there were almost as many exits from the labor force as there were jobs gained on the report. And so what I'm going to be looking for is to see if that gap either closes or widens. Are we going to see the labor force shrink, or are we again, for the second or third month in a row, or are we going to see it grow? And that's very important when you're in the midst of an economic recovery, which we are. We have not yet entered the growth cycle of the economy because it has not yet reached the trend that was established prior to the COVID-19 pandemic. And so that is an important an important thing to look out for, and something that we'll definitely be talking a lot about tomorrow. So I want to wish you a happy Thursday. It's my personal favorite day of the week. I hope it is. Well, I hope you have your own favorite day of the week. You don't need to have my favorite day of the week. That would be ridiculous. But if you also happen to like Thursdays, I hope this is a particularly good one, and I hope to see you back here on Friday for Supply and Demand Daily. I'll catch you later. Thank you very much for watching. Take care.